Good afternoon, and thank you for joining us for another Viriathus investor briefing. I'm David Batista. Today we'll be showcasing Lindian Resources Limited, which is listed on the ASX under the symbol LIN and on the OTCQB under the symbol LINIF. Lindian is an Australian company that is developing world-class rare earths and bauxite assets. And to tell us more about the company's assets and its equity story is the company's Chief Executive Officer, Mr. Alistair Stephens. Following Alistair's presentation, we'll engage in a Q&A session. So to ask questions throughout today's webinar, please use the Q&A function at the bottom of your screen. Alistair, I'll pass it on over to you.
Thank you, David, and thank you very much for the opportunity for Lindian to give its first presentation to our US potential investors. Here, as I said, as you said, OTCQB LANF is just a new portal for us to share our securities on. So very happy to be now part of the USA securities environment. Yes, we have two sets of assets, one in bauxite and one in Malawi, in rare earths. The bauxite assets are in Guinea and the rare earth assets in a country called Malawi, the southern eastern part of Africa. Guinea is obviously in the equatorial part in the northern and western part of Africa. But today I'd like to focus on the rare earth projects in Malawi. So let me go through the presentation, a little snapshot of the corporate overview. We have 1.15 billion shares on issue. We have about $18 million in the bank. As of today, we had $20 million at the end of the quarter. We've got a relationship with a US trading group called Gerald, we've got a MOU for a debt facility of about $10 million. This is the board and management. I won't spend too much time on this, but very, very engaging, very talented board with a project team behind me. Jack Fazia, who's one of our directors, is also project execution director for our construction phase of Kangankundi. So let's talk about Kangankundi, the asset. It's a massive resource of rare earths. It has superior quality, as I'll demonstrate very shortly. It's got low APEX and low OPEX and a near-term production capability. The reason is that Kangankundi, which I nicknamed the King, is permitted. It's got a mining license. We have an explosive license. We have an environmental social impact assessment certificate. We have been granted a water permit, but we're waiting for that certificate to actually end on our desk very shortly. Technically, it's a very simple project, very big resource, simple open pit mining operation. It's gravity separation techniques to recover a monazite concentrate with low APEX and CapEx. So it is a superior asset with great quality and massive scalability. So Malawi is a country, as I said, in the southern and eastern part of Africa. It borders the Great Lake Malawi along the Rift Valley. The project itself is located in a town just south of a town called Balaka. The red box in this image here on the right-hand side is our mining license. The blue box around it is the exploration license surrounding the mining license. We're only 5 kilometres from the major highway, the M1. We're about 7 kilometres and 8 kilometres away from a 66 and 132 high voltage power line, which comes off a hydroelectric power station towards the south. We have very close located to rail infrastructure as well. Now, this project will operate out of the town called Balaka, where we'll house people. So there's no need for camps, airports, or expensive infrastructure on site. So Balaka is only about 25 kilometres from site, so it's very convenient. As I said, I nicknamed it the King. We have a resource of 261 million tonnes at 2.19% total rare earths. We've got a ratio of NdPr of 20%, leading to 1.2 million tonnes of NdPr. That's an important number because that represents our payability in our concentrate, or the vast majority of our payability. It also has massive potential to extend this resource. So the image on the left hand there is the surface image of the geology. And there's a black dotted line with a yellow area. That's the limit of our current resource. We've got a prospect to the south by about 500 metres and a prospect to the north or about 800 metres. There's rare earth assays going 3, 4, 5, and even 6 and 7% total rare earths. And then we've got a perimeter around the MRE, which we haven't explored at the moment as well. It's also mineralised. So there's potential to extend this resource on its surface footprint. The sections on the right are 2 cross sections where we did 2 deep diamond drill holes down to 1 kilometre each. There's a red dashed line there, which is the bottom of the MRE. And you can see from those drill hole intersections that the resource also extends at depth by at least another 800 meters or so below the bottom of the MRE. So it's very easy then to say, well, if the top part has 260 million tonnes, it's very easy to duplicate that 2 or 3 times down depth and a little bit of width on the side. I believe this is a 1 billion to 1.5 billion tonne deposit at probably an average grade of around about 2.5%. So this puts it in as an absolute giant project. Why aren't we doing any more drilling? I'll tell you why, because we're getting into production. We've got enough resources, enough capability and engineering studies to actually go into both a feasibility study in the next quarter and in production. So what we're focusing on inside that first resource is this area, which is outlined in red, which are the higher grade zones within that resource where we're actually doing some infill drilling. We're getting grades of several hundred meters between 3 and 3.5%. This grades up to 4.5%, but I would expect the average grade to come around somewhere to 3 to 3.5% TREO. And then we'll put a proper mine design around those pit areas. This is our metallurgical flow sheet. It's very low tech. We've got mobile crushing, we've got grinding. Behind that, we've got this multi-gravity separator technique, which is like a washing drum, a high revolution drum, which splits the heavy monazite, which is the rare earth bearing monazite, out from the rest of the gangue material. It goes through a phase of wet, high intensity magnetic separation, a final impurity removal phase before we just bag the concentrate. So that's basically power and water are our only consumables within that flow sheet. This is the type of metallurgical recovery we get, the product quality. We're getting around about 70% recovery of concentrate, 60% concentrate grades. In fact, the best concentrate grade we're going at the moment is 68%. And that is very important because that represents, just like grade is important to a mine, concentrate grade is important to downstream processes in terms of their financial productivity. As I said, NdPr ratio 20%. Important here, this is one of the most unique projects in the world because this monazite is non-radioactive. You probably hear that lots of rare earth projects have challenges with radioactivity, and not this one, not at all. And we've even had it tested by the Australian Nuclear Science and Technology Organisation to say, yes, our concentrate isn't radioactive for the purpose of transportation. That is an amazing environmental footprint advantage that we have, but also a commercial advantage. That means this concentrate is general goods. You can put it in a steel container and you ship it anywhere in the world as a general good material, which means you've got commercial dexterity. And that's a commercial advantage that we're going to take advantage of. So here's our business model, just to put you a perspective of what the rare earth processing flow sheet or value chain looks like, is what's called the upstream, which is mining, beneficiation, monazite concentrate. And there's the midstream. That's in the hydrometallurgical processes. Hydromet and that midstream process is an extraordinarily expensive, high capital, high technical risk process. And then downstream, there's obviously magnet manufacturing and component use. Our business model is to stick just in upstream, mining, beneficiation, monazite concentrate. That is a low risk, low capital, low technical risk business model that we're going to stick to. So let's have a look at the market just very briefly. So I talked about NdPr. Magnets in this NdPr forms the vast majority of the magnet market. You would have heard these other minerals called Db, Dy, terbium, dysprosium. They also go into the magnet market. But there's two types of magnets. One's the NdPr magnet. The other one's this NdPr magnet that's doped with Tb, to have it perform in higher temperature environments, which means that 97.5% of the magnet market is NdPr and only 2.5% is Tb, And in terms of value, 91% of the value of the rare earths sits in with that magnet value flow chain. Therefore, about 90% of that is NdPr. So it's the vitally important thing. In fact, you need NdPr to actually unlock the value chain of Tb, So it's a key commodity within the rare earth market. What does the growth look like? In this chart, I'm going to say between 2010 and 2020, the demand for NdPr doubled from 20,000 to 40,000 tonnes. So here I'm saying, look at the trajectory here. The red line and the green bars is the forecast from a group called Project Blue, which is often used here in Australia by most rare earth producers as the view on what the growth of the rare earth market looks like. And then the blue dotted line there is what looks like to be the trend from 2010 to 2020, extended out to 2050. By 2030, on both those trends, there is a shortfall of NdPr between 20 to 50,000 tonnes. So there's certainly plenty of growth in this market for new entrants like Lindian will be. And the market it goes to is basically consumer electronics, electric vehicles, and wind turbines. So let's look ahead. Let's revisit this. Just a reminder, it's fully permitted. So I have a mining license, we've got our environmental certificate, got our explosives license. We're going to have our water permit certificate very soon, even though we've been granted a permission to extract water from water boards. We are nearly complete. We did an infill program on that high-grade zone I showed you with the resource blocks. We've got some assays coming through probably next week, I suspect, will be the last of our assays coming through from that drill program. And then we'll go into an indicated resource, which looks like it's going to be published somewhere around middle of April, so it's not far away. Our mining schedules will be developed close on behind that. We've just about finished our technical report and all the other technical studies. They're 98% complete. And CapEx and AlpEx are coming through within 2 years. We're very close to actually finalising both of those, which means our feasibility study will be published next quarter. We'll have our project valuation, which is on face value at the moment. The numbers I'm looking at is absolutely stunning. And we'll go into our stage 1 construction in the next quarter. So Q2 calendar year this year, we will be in construction phase. Now, the CapEx and the OpEx are going to be a stunning surprise to the industry. Rare earths are known for being high OpEx and high CapEx type operations, and not this one. Our CapEx is looking particularly low. I mean, it's a very small percentage of our market capitalisation, to put it in one perspective. And our OpEx, I think you'll see that we're going to be a market leader in terms of our OpEx profile, as in the lowest quartile. The other thing I want to touch on here is just how much work we've put into engagement with the community. We've had the minister on site. We've engaged government very carefully. We've got social groups, which are called area development committees or environmental committees that we engage with. There's chieftain committees. We also employ people out of the governments to come and work on site as an additional training exercise. We've had some fantastic support by the Australian government in having social events on site where we've invited the village chief and the area chief and the senior chief too, such that there's full engagement between us, the community, and the other circles of diplomacy, if you like, that's often missed within these communities. So we've got a great relationship with the people. The next one is, what does this look like in terms of environmental footprint operation? This is a water-only gravity separation technique, no chemicals. That's the first environmental footprint advantage we got. Second one, it's not radioactive. 3, we've got access to hydroelectric power. So there's another sustainable source of power and a clean source of energy. We're very careful about our environmental care, and we're at the very early stages of that because we've only been on site about 18 months so far. And we've got programs at the moment where we're actually doing reforestation. We're trying to help with some agricultural work. And of course, I'll go reiterate this in an environmental care perspective. This is a non-radioactive concentrate. So not only important for site, it's also important for those downstream processes, that hydrometallurgical stream, where they're going to produce rare earths, and then their waste products are going to be non-radioactive. That's a really important aspect within the whole value chain. Community, we've been very heavily engaged. And then we've got sustainable mining. This asset is actually a hill. It comes out of the surrounding plain by about 150 metres. So we're going to start with a diesel fleet, but we hope to actually introduce electric mining vehicles progressively over time. And the advantage here is that we're going uphill empty and coming downhill full. And that's the perfect environment for electric trucks. So that's future programs about how we can actually turn this into a fully electric operation. So it'll have one of the lowest environmental footprint, near net neutral carbon, possibly even just plain carbon neutral footprint. A really fantastic accolade on this project. Here I want to touch into what does the US do in the Republic of Malawi. They established relationships there back in 1964. They provided a significant amount of funds into bilateral assistance in Malawi. And they are main instigators. So the World Bank and the IMF are very heavily involved in Malawi because it's quite a poor country, and the US, being a major benefactor of those groups, are very influential in several times in this country's existence to actually relieve them from their debt liabilities, because they're a particularly poor country, mostly agricultural. But Malawi is a member of the United Nations. And just recently, the US are building one of the biggest embassies they have in the world, not the biggest, but a very large embassy in Malawi worth $90 million, which is going to be a signal to the importance that Malawi has within the US relationship in the whole African continent. And a snapshot of Malawi: it used to be a British protectorate, so it has English, a derivative of English law. It's English speaking. It has a Westminster system of parliamentary election. It is still a Commonwealth member. Its tax system is very similar to what we have in Australia or England: 30% tax, standard depreciation, amortization, and a 5% royalty. 75% Christian population, and extremely polite and peaceful people. I walk around the Balaka town very comfortable in my safety. I feel no apprehension just walking around on my own. So it's a great country, and hopefully you can come one day and see just how lovely these people are. So what's the value proposition here for Lindian and for investors? We used to be, last year, a resource development exploration company. No longer. We're changing. We're now a development company, and we're going to be into the construction phase in the next quarter. And the timeline we have for construction is roughly that we'll be in production in the last quarter of 2025. So very much a near-term operating entities as well, developing, operating, growth opportunities to organically grow the production profile of this business in a project that has superior quality. So this is one of the best opportunities for investment into a company that has a great asset, scalable, low capex, low opex, with a fantastic environmental footprint. Thank you very much.
Fantastic. Thank you for that, Alistair. We have some questions in the Q&A box, so we'll just start cycling through those. The first question is, how does mining property ownership work in Malawi? Is it structured as a concession, joint venture, or something else?
The Mines Act in Malawi has you apply for an exploration license and you do your exploration activities. Once you've completed a feasibility study, a pre-feasibility study, and environmental and social impact assessment studies, you can then ask for that exploration license to be ascended into a mining license. So you have to go through that process, both the commissioner and a parallel committee to the commissioner before it gets signed off by the minister. There's two types of mining license in Malawi. One's called a medium scale, the other's called a large scale. We have a medium scale license, which means we get 100% equity. The large scale, if you do total material movement of more than 5 million tonnes per annum, then you qualify as a large scale, in which case the government has the ability for a 10% pre-carry equity. And our first stage of production is around about 450,000 tonnes per annum in total material movement. So we're well and truly under that 5 million tonne per annum hurdle before you get to large scale. So then the license is renewable at the end of the term by 15-year terms consecutively.
Okay, next question. Like many junior mining stocks, the market cap here is on the small side, making it difficult to raise capital. Would there be an appetite to sell one or more of the projects to one of the major mining companies?
I didn't touch much on the bauxite assets, and I was going to leave that for a subsequent webinar to touch on that. But we're looking at a joint venture type arrangement with a major in Guinea, where we would, for no capital, no cost, perhaps be a junior joint venture partner in an exercise where the major supplies all the capital for development of those projects. So we don't have to sell that asset. Well, I guess you're kind of selling it, aren't you, when you're reducing your equity, but it's a zero cost equation for us with near-term production opportunities as well. So we're doing that kind of style of negotiation at the moment, and hopefully it comes to fruition, but I can't guarantee it at the moment. It's still early stages. They're doing their assessment on that. In terms of Kangankundi, the capex for that is significantly lower than our market capitalisation, and we've had interest from both Gerald of $10 million to help fund a significant part of that capital development. There's negotiations with other corporate entities and operating entities for participation in that for an offtake. So Gerald gets 40% of our offtake at the moment, which is 45,000 metric tonnes over 5 years. So there's another 60% of our concentrate that's yet to be marketed. So we would hope to duplicate and extend that kind of arrangement where we get a prepayment of sales as a debt facility that we can then use for capital development. So right now, we are at a net neutral position of having to go to the market for equity. Even if we did, it's extremely small and wouldn't be a problem for us. So there's almost a non-dilutive funding proposal that we can access at this point in time.
Okay. Next question. Who are the largest shareholders?
Let me go back to the corporate page. So where I didn't touch on the shareholding, there we go. No, that one. Kabunga Holdings is the chairman. That's Asimwe Kabunga, our executive chairman. He holds 11%. Bonacare and Topway, both those holdings are 10%. That's a gentleman called Parkway, who's third from the bottom there on the left-hand side. He's a Sydney-based property developer. Venn Capital is the brother of Asimwe Kabunga, 8.8%. Rowan Patnaik is an American chap of Indian descent. It has private investments. I believe it's a family sort of trust environment that he invests in commodities and various investments around the world. So Rowan's in there at 6.7%, and I believe he's in Perth at the moment. I'm catching up with him hopefully very soon. So they're the major shareholders. Our top 20 have about 68%, top 50 about 78%.
Okay. Next question. What's the timing of the feasibility study?
As I said, the indicated resources are mid-April. You need to have them to convert them to an ore reserve later. So right behind the indicated resources, we'll do our mine planning, mine scheduling, and mine designs, which means that should finish around early May. But these being very small pits to start off with, but it'll at our production rates of 450,000 tonne per annum, will define around about 20 million tonnes of indicated resources, which gives it a mine life of at least 40 years. There's more beyond that, but the first stage is only 40 years of mine life, which means we'll pull that all together. We should be publishing our feasibility report mid to late May is my view on life at the moment.
Okay. Next question. What is the development plan timeline?
So I said we're going to go to construction next quarter, and I guess that's the soft end of construction phase when you're actually building roads, and the roads are around about a $500,000 to $600,000 exercise. So it's not a lot of money. We've got plenty of money in the bank to actually start that, and you're pre-ordering long lead equipment. So we'll do that in the second quarter of this year. We will be in the commissioning phase under the current timeline development in the third quarter of 2025. That's a calendar year third quarter, which means we'll be producing in the last quarter of 2025.
Okay. Next question. When do you expect to be in production, and how much are you planning to produce?
Okay, fourth quarter of 2025, on an annualized rate, we're producing somewhere around 10,000 to 12,000 tonnes per annum of rare earths in concentrate. The caveat on that is I just need to know what the grade is out of the indicated resources. And as I said, it's around about 3 to 3.5%. Our recoveries are about 70%. So I've got a fairly good guidance at the moment as to what I think it'll be. Where the grade actually lands, I don't know. So that's the profile. On an annualized rate, about 10 to 12,000 tonnes of TREO, which means there are somewhere around 2 to 2,200 tonnes of NdPr in that concentrate, which is most of our payability factor.
Okay. I don't see any other questions outstanding. So I think that will be it. So Alistair, thank you again for taking the time to update our investors. As a reminder to our viewers, a recording of today's investor briefing will be available on the Viriathus YouTube channel, as well as on the Lindian Resources OTCQB profile page. Thank you for joining us, and thank you, Alistair.
Thank you.